Always the uncomfortable silence right before you start. Like, oh,
Oh, I was a teacher for the beginning of my career, and so when I heard silence, it was actually quite golden. So
thank
for
goodness.
me, silence is comfortable. It's it's so nice. Uh, Fantastic. Well, let's kick it off. Thank you everyone for joining us. If you just joined and you're looking at the chat, seeing some of our other members have already logged in and have posted where they're calling in from. If you would also like to follow that trend, you can use the chat box either at the top or the bottom of your page, depending on your what you're using for your browser. Click that chat and feel free to drop in where you are dialing in from. And as the presentation goes, as we're going through the presentation, feel free to add your questions to that chat, and we'll be collecting them and answering them towards the end of the presentation. So if you have any burning questions right now, feel free to type them in there, or as we're going through the presentation, you can type your questions in and we'll make sure to answer them either during the presentation or in the event that we run out of time. Don't worry, we'll collect those questions and get the answers for you afterwards. We are also recording the presentation. In the recording, you're going to see the people who are on the screen here. So if you're not showing your audio or camera, don't worry, you won't be captured in the recording either. But we are so excited to have you here. First, I'll introduce myself. My name is Josh Henniger. I know many of you who are on the call today. I'm the program manager for the Accelerate program here at Resound. We are glad to be able to offer you this webinar from one of our fantastic marketplace partners, Fates, Bodily, and Parker. Today we have with us Tom. Tom Parker is with us to share more about what does unlocking your practice's financial potential mean, and what do they do at Fates, Bodily, and Parker, and how might that be something that you can tap into as one of our members moving forward. And so we have a lot of time, or we have a time together today to answer your questions and learn a little bit more about Fates, Bodily, and Parker. And like I said, we will be sending this recording out afterwards. So if there's anything that you've missed or you wanted to review, we'll be able to send that out to you afterwards. And like always, anytime you have a question after this meeting, feel free. You can send it either to myself or Tia if you've been working with Tia Hermunson on my team, and we'll make sure to get the questions answered for you. So without further ado, I do want to hand it off. Tom, welcome. Thanks for being here.
Oh, thank you for having me, Josh. I appreciate it and getting this all set up on relatively short notice. So excited to explain a little bit about what we do here and a little bit of background on us. So we're a CPA firm located in the Chicagoland area, full service. So audit, tax, acquisition, selling, consulting, I guess. So kind of just the full gamut of what you might expect from a CPA firm. There's a little background just specifically on the firm. Like we purchased the firm, my partner and I, in 2020 from his dad. So at the time there were 4 employees, and so since 2020 we've grown to 25, focusing in on the small to medium-sized business market. So some manufacturing and other stuff, but a lot of our practice is also focused in on professional services. So doctor groups, and yeah, so we've been putting that together, and like a lot of questions going on, like how do I run my practice, what do I need to do, how do I get certain things off of my plate. And that's what we've realized is as a spot in the marketplace is how can we make more time for the business owners that need to have more time to either do something they want to do personally, or if they want to be focusing on creating more wealth inside the business. So how do we help with that? Uh, so that's a little bit of background on what we saw, and I'll give you a little bit more detail now on how we're helping people achieve going through that. So, so one of the main focuses is really the tax focusing, like the tax piece. Like, so our business has been built around that component because taxes are a huge expense inside someone's life, and we want to make sure that we understand and get that. So no matter what CPA firm you're working with, you should be having some kind of a tax analysis done, and you should be making sure you understand like all of the ins and outs of how your business is flowing income to you and how you're being taxed on it. Oftentimes that's where we start with our process to make sure that we're getting the foundation built properly. It's very common that we end up working with someone and doing some changes early on in the relationship in order to make sure that we're set up for success down the road in terms of tax, and especially when it comes to exiting, making sure that you have the proper structure up front is very important. Then the second component of this is looking at your financial picture, right? So understanding what your balance sheet means, like how do I read this? How do I make sure that I'm driving wealth inside the business and growing the valuation? Because most of the time we're working on this for not just because we like working on what we're doing, but it's also because we're trying to make some money along the way, and we want to make sure that we're doing the right things in order to spend our time wisely. And then the third component is figuring out what is the 3 to 5 year plan, is like generally speaking where we start. Oftentimes it ends up going much further beyond that, but it's an important piece that you need to have some kind of a strategy in place so that as you're making decisions today, you know what the end goal is down the road. So this is basically like kind of like our starting point. And then oftentimes our services start with just one piece, and then it expands into all these other ones, because as you're doing the tax analysis, then it feeds into understanding what's happening on the financial side, and then it feeds into the conversation about what's happening down the road, and what the ownership group wants long term. So that's definitely what you want to be getting out of your relationship from a CPA firm. I feel like your CPA should be able to provide all of these things and more to make sure that you're getting all the value that you can. If you're getting just tax preparation, generally speaking, you should have someone else looking at it and doing an actual analysis. So reviewing what's happening inside your tax returns for the prior year, and and seeing what changes can or should be made, and like what the process is for that. So that's kind of us in a quick nutshell. And I thought we'd maybe walk through a little bit of an example. I don't really have slides for this, so feel free to fire away with questions too along the way. But started working with a group about 18 months ago. They had six locations at the time. The office manager was doing all the books. The doctor had been running it for 30 some odd years, and he started off doing it all like on his own, right? He was doing everything, and then it kept growing and doing well, and they never updated their systems along the way. And it's super common to see that, because you go from, hey, I'm just driving the business and creating value, and just keep doing the day to day without ever taking a step back to realize, can I do this more efficiently? So ultimately, we ended up getting in there. He was doing like a bank refinance or something. So a banking contact of ours referred us in and said, hey, can you help him out? And we get in there and start looking at things and notice they're a C corporation. So for those of you that don't know, there's different entity structures. So there's LLCs, S corps, C corps, and they're all taxed differently. And a C corporation is often like bigger entities, diverse shareholder base, lots of international, or like your publicly traded company, like all of that is like really for C corps. And there's an issue with double taxation, and exiting from a C corp can be really messy, and depending on how that's done, because you can get taxed twice. And so we look, anyways, going back to this example, like we look at them, and this is one of the first things we notice. And okay, you got to pay yourself inefficiently, and we end up getting through and looking at it, and the guys were pretty profitable, and making a switch to an S corporation was able to basically net them $180,000 a year in their pockets. And that was kind of like the tipping point of like, okay, we're understanding like we needed to do that. We should have done this analysis before. And anyways, now it led into a whole bunch of other stuff that we're doing for them. And I just want to make sure I'm expressing like the tax analysis was the driver for that. Like they were working with a top 50 CPA firm, but they just weren't getting the attention they needed. And us coming in to kind of perform this analysis, which was kind of going on a different, they needed financing, and then what led into the tax analysis. Like just talking to the CPA, kind of we were able, us as a group was able to get this thing rolling for them. So then it also led to how they were paying their taxes, like what was going on in the financials. We found out that they weren't recording certain credit card expenses. They weren't making changes on their AR or their AP. They weren't adjusting for insurance like out of their AR. So their AR balances were just growing. So we were able to help them clean it up a little bit and change again how they were taxed as to this S corp. But then we also switched from an accrual basis, which means you're paying tax on all of the AR that you haven't received yet, to a cash basis, which also was able to help them defer a bunch of taxes and pick up the income once they actually received the money. So it can be really painful to pay taxes on money you haven't received yet. So that was a nice switch, and that's available to people and up until they cross over to becoming a large corporation in the IRS's eyes, which is 25 million of gross receipts on a 3-year average. So this group was at 18 million when we started working with them. They're at like 22 or 23. So we were able to defer this tax of like $500,000 basically up until indefinitely at this point, because they haven't crossed over the $25 million threshold. So, and it's again, what's all feeding back to this tax analysis of like, well, why am I paying so much in tax? And then having the conversation about, okay, well, let's make a couple of these switches and getting the ownership group educated, because we don't like to make decisions where we just tell you what to do. We want to make sure that you're understanding this is why you're doing it and what are the mechanics behind that and how it changes, because it is a big change if you're making a switch like that. And it led into other stuff, right? Like, so the two partners that were there were considering adding a third partner, and then they got worried about, are we paying out too much in terms of percentage of compensation per production? And so we ended up doing a projection, and we kind of mapped out the next 24 months just to see what that kind of looked like. And we noticed there might be an issue, but it's probably not for a few years down the road. And it led to a broader discussion of switching compensation for everybody and making sure that the practice stayed healthy. I'm simplifying that a lot. There was a lot of analysis that went into that, but it was a really worthwhile exercise for the partners to see, okay, do we want to add in other equity partners? And if we do, what's that going to mean to us in the long run? So that was a nice long set of stuff that we did. And then in that process, we noticed there were some issues with how the previous doctor, second partner, had bought in, and making sure that the dollar amounts were correct on his buy-in, and there ended up being a square up where he was owed some money. And so oftentimes, I think a lot of things are done a little bit blindly, and it's always good to have a second set of eyes on your work to make sure that you're not just trusting someone to, hey, they know what they're doing this the right way. And you need to have someone that's got a background in your field and have an understanding of like, okay, this is how medical practices work. And especially if you're looking at doing different things like expanding or exiting, whatever it is. Oftentimes those things can happen at the same time. This other practice that we were working with, after they ended up not allowing the third partner in, or she decided not to buy in, and they pivoted and said, okay, well, what do we do next? And then it went from, well, we should maybe just sell, to let's go and acquire another business. So they just closed on another practice, and we helped them through that process and structuring. So now they went from 6 locations to 9, and now they're talking to investment bankers about potentially exiting in the next 3 to 5 years and what that's going to look like. And we're helping them through the valuation process. And I look back and I talked to the owner the other day, and I was like, how would you have done like all of this? Like, he said he would have just leaned on his office manager, or it just never would have gotten done. And the office manager stretched super thin, and we took payroll off her plate. We took financials off her plate. I don't know how they could have gotten to the spot where they were closing on new practices and how they're structuring this exit and changing compensation. Like, again, it was just come back to putting hours back in the doctor's pocket so they can spend more time running the business, but making sure they're doing it with accurate financials and accurate data on where we see the business headed and what's going on with it. Yeah, so that's all business related. And then the taxes end up becoming very personal too, right? Because most of the time it's some kind of a flow through entity, so a partnership or an S corp, where the income's ending up on the personal tax return too. So then we get involved with the personal side and making sure that we understand what's happening there too. And oftentimes doctors have some wealth, there's some estate planning issues. And in particular for this guy, he's amassed a lot of real estate wealth, and we ran through, and we've been doing a bunch of work for him personally to make sure that as we're getting the valuation for the business done and understanding where that's going to end up, that we also are considering what that does to his personal balance sheet and making sure that the estate plan is in order so that as an exit occurs and there's a liquidity event, we can make sure that that cash is deployed the right way, it's titled the right way. So our wealth management team's assisting with helping build that plan so that in whatever, if it's an exit in 12 months or 24 or 36, we already have a plan built instead of, okay, well, all of a sudden we exit and there's a pile of money just sitting there. And what do we do with it? And then we start figuring it out. We're trying to eliminate the downtime and make sure that we've got a strategy in place that's going through to the retirement aspect. Because once you sell the practice, you're going to end up working probably harder than you ever have for a little bit. It's just like a shorter chunk of time while you're transitioning everything. And then after that, it's like, okay, I want to not have to worry about anything else. And it's good to have a plan set in place with the retirement planning and the wealth management piece at that point. So that you can focus more on what you want to be doing. Again, it comes back to giving time back in your life and spreading out when you should be doing these tasks. So instead of it being a crash course, it's kind of done at a pace that everyone can be comfortable with. And again, make sure that we're not making decisions right now that end up harming you in the future.
Hey, Tom, do you mind if I
Yeah,
jump in real quick?
sure.
So with the review of financials, you touched upon the, the planning, the exit planning or acquiring new practice. How often, apart from those times, would you recommend reviewing financials?
Quarterly basis for sure. So in this case, like with a bigger practice, we start with monthly once we're getting things cleaned up because things keep falling out. Like people assume things are all ending up on the financial statements and then they're like, oh, well, what about that payment? And then we see that it wasn't done and it's not recorded anywhere and the accounting behind it isn't actually being done properly. So the first 6 months, it's nice to be able to look at it on a monthly basis because everyone's got a sharper memory at that point, right? Like we know what's happening. There's a little less fog. So that's definitely the goal is to get to a spot where you're at least reviewing it quarterly. But early on, I would suggest doing it on a monthly basis for at least a clip until you start saying, okay, these financials are starting to make sense. And again, it kind of depends, right? If you're in acquisition mode or exit mode, monthly is probably better than quarterly because you're trying to figure out liquidity in terms of either making an acquisition or the person that's coming in to buy is going to be wanting to look at your numbers on a regular basis. Good question.
Hey, yeah, thank you very much. Any other questions? If you're curious as Tom's talking through, feel free to drop them right in that chat there. You can choose either to send it to everyone or just host some panelists, and we'll be able to get those questions answered. But thanks, Tom.
Yeah, please, more questions. Yeah, it's definitely better. I prefer that as opposed to just talking. Yeah, so thinking, I guess, on the terms of the financial piece, definitely the analysis at that point, and then at the end of the year, oftentimes because there is an accrual to cash difference, what we'll do is every 6 months or so, we'll do a check-in where here's what you're going to pay tax on, but here's what the actual balance sheet of the company looks like because they are different numbers. So we want to make sure that we're marrying the two together. So you're going to get money distributed and you're going to pay tax on this dollar amount, but then here's what the business actually looks like and here's what it's going to look like over the next 6 to 12 months. So we want to get to a spot where we're looking forward, not necessarily always backwards. So that comes into more budgeting, projection, pro forma type information. And like, I guess the difference there is like budget is like, hey, let's set it at the beginning of the year. We'll take a look at it. It can be a living budget where things kind of adjust as things are happening, but it's not necessarily saying what you assume is going to happen. This is what you want to happen. And then a projection is more of, okay, here's what we think is going to happen. And here's why we think it's going to happen. So those are two different things that we want to get into the aspect of doing. And it's actually very important, especially when you're going to do an acquisition or an exit, having that projection together, because you don't want to get yourself into a spot where you acquire something too large And also the valuation side, when you're looking at metrics like this, we call them KPIs, key performance indicators. Like if you're looking at those things and you're talking to an investment banker or a PE firm or someone upon an exit, they love seeing that information already put together, and it helps add value to your firm because you're already tracking certain metrics that they're going to want to be looking at anyways. So it just keeps things buttoned up and a little bit easier to get the value of the business and make sure that you're reviewing things too, right? Like it shows that you're putting attention in the business, and it kind of helps eliminate some of those questions when you're getting through that spot.
Can you talk a little bit more about that pro forma and cash flow? Because I know that's always a hot topic when I'm talking with accounts or talking with our members about cash flow. You know, if I'm purchasing a hearing aid for $1,000 and I'm selling it for, or I'm fitting it for $2,000, what does that look like, and how do I ensure my cash flow is working? That's something that I'm hearing often. What are some of the questions that you get about cash flow, or how would you
Yeah.
address that?
Yeah, and it starts with a solid financial foundation, right? So if we have a solid financial statement, we can start putting together cash flow projections, and it comes down to pricing products, and it kind of moves almost into like a manufacturing model too, right? Like manufacturers are always got to be figuring out how to price everything, and we suggest looking at your pricing every 6 months, basically. So similar concept here, right? Things are changing all the time, especially, I mean, I don't like to use inflation, right? But like it'd be like all buzzwordy, but it's been a big thing in the last 2 years, and that we've had to make sure that we've been watching our pricing to make sure that we're not just eroding our bottom lines in order to keep business coming in the door. Like it doesn't necessarily make sense just to take on work that you're not making enough margin on. So we got to be very protective of that. And if you take your eye off of pricing for more than like 6 months, I think you're doing yourself a disservice.
So one thing I've been thinking is, how do I get started? So this might be something that some of our friends on the call here are thinking is, I'm either working with a CPA right now already and this is all news to me, or I'm not really working with a CPA very strongly. What are the first steps, and how do you approach a new firm or a new practice that comes across your door?
Yeah, usually it starts with like introduction conversation, right? Let's talk for a half hour or an hour, just kind of get to know your practice, what you're thinking, what's your vision. Make sure that we think it's aligned, right? Like we want to make sure that there's buy-in on both sides because it does take a lot of time and effort, and we want to make sure that everybody's going to put that effort in. Otherwise, it's just kind of a waste. So that introduction is making sure that it's a fit on both sides, and then it's a review usually of the tax work. Um, and it's not always that we're going to replace the current CPA, right? Like, I mean, I don't know the tax laws in certain states super well. Like we've got clients that are in most states, but we're okay with working with other professionals, especially if a practice is saying, "Hey, we want to get in on the acquisition side," and they're working with whatever, a family member, brother-in-law, or something that's doing their stuff. Like we don't have to necessarily step on anyone's toes in that regard. But we want to come in, clean up financials, make sure things are looking good, and then help you make a decision on, okay, if we decide to expand locations or whatever, what do we need to do? We can come in just on a consulting basis too. So usually it's just figuring out what those needs are. So the first hour, usually we can get the top 5 things that are kind of bothering you, right? It's one of the questions we ask, why are you, what keeps you up at night, right? And that usually helps resolve figuring out like what everyone needs to do and make sure we're aligned timing wise and all that. Yeah.
Thanks. I saw that Brian did just put in the chat here a link if you're looking to book a meeting with Tom, just to have that introduction. Like you said, not necessarily jumping from your current CPA, but just as another sounding board. You can click on that link. We'll also send that out with the recording after the webinar, either later today or tomorrow. You can also find Fates, Bodily, and Parker on the marketplace. So when you're logging into your Resound Pro account and you go to the marketplace, you can find out more information about Fates, Bodily, and Parker and schedule a consultation there as well. Right now, we still have some time for questions. So again, please feel free to type those questions in. I'm getting my questions answered. Don't want to run the show here with all the questions I have. But if you have anything that you're thinking about, there is no silly question here.
No, it's definitely right. I mean, we're right in the heart of tax season, and everyone's the question I always get is like, well, what can I do to reduce my tax bill? And I'm like, oh, I have to give the answer to that. Like, I hate giving, but it depends. Right? Like, we got to look at everything and figure out what's going on. And oftentimes it is hard. Like, doing tax planning is super important. So, like, we're starting to work on our 2024 planning, like as we're finishing 2023, so that we're ahead of the game a little bit. Because if you wait until now to try to do something to change it, if you're paying taxes on the cash basis, there's pretty much nothing you can do. Like that's really, really painful sometimes when you wait until after the fact, you're like, oh, I wish I would have done this, right? But then you get past tax season and you stop thinking about it, and then you get to November or December and you start asking questions, and it's just not enough time to actually get the information to the CPA to do an analysis. So yeah, there's definitely a a timeline that needs to make sense, right? Like, so we're a group that we're around all the time. Like, yes, I like to golf or whatever in the summertime, but I'm around and I like to make sure that we're moving the needle on making these decisions along the way, like during the year. And there's a huge cliff coming, right? With the tax law resetting on January 1st, 2026. So timing is like really, really important right now, especially if you're in a spot where you're thinking of exiting and there's estate planning potential, right? So the estate exemption right now, if you're single, is like $13.1 million. And if you're married, it's double that. So, but on January 1st, 2026, it basically gets cut in half. It's like it goes back to what it was before. So it's down to 5-6 million. And it could be a potential big change for a lot of people where a net estate tax number is 40% of any of that number that's above that. So it could be a really big payment that you might be looking at. So it might not necessarily be what can I do for this year's taxes, but what do I need to do with my overall tax situation and make sure that I'm assessing what's happening today and down the road of at least what we know right now. Because obviously tax laws are changing all the time, but that's what's happening right now.
I think that's a great nugget of wisdom there is think about next year's taxes today. I think that's really good. I'm going to definitely take that away. We do have a question here from Melissa. So thanks, Melissa, for writing it in. She's saying that her current accountant in Florida is really great, but she has had some less than great in the past. She's been told that audiology is an odd field for accountants. Is that something that you're seeing, Tom? Is the audiology a strange field, or do you see it differing from other medical fields or other firms that you work with?
I think it's because it's a hybrid, right? Like you are selling like the hearing aids, and there is a retail component to it, and there is a professional services component to it. So I think that could be part of why someone might say it's an odd field, because there are two, it's basically different businesses inside one. But we have experience in both sides individually. So it's just making sure that we're looking at things on a joint basis, right? Like we kind of divide the profit and loss or the income statement into two different divisions and make sure that we're tracking and understanding what's happening in those two areas.
Great. Yeah, and I think we have another question here for or a statement that I'm kind of interpreting as a question. But let's say that someone has a full-time CPA. What is the what would you say is any sort of risk or reward for while I have a CPA I'm really comfortable with? Why might I want to reach out to you just as a second set of eyes?
Well, the risk is nothing, right? Like we're just gonna take a look. We don't charge anything on the upfront for like the analysis, the review. Like it's all time that we're willing to spend to make sure that we're giving good advice out. And we're willing to bet that yes, hopefully making that introduction at some point, maybe there's something that CPA can't handle. Like we're kind of in the middle of CPA firms where we have a large like breadth of services because we have enough people, but we're not necessarily one of the massive firms where we got to charge for every time you pick up the phone. Like I don't want to be. I'm the opposite of most accountants. Like I don't like looking at the timer. I don't want to do that. Like I'd rather just be able to have a conversation and see if what we can do to help the practice make the right decisions for them. So you'll never see a bill from me for a 10-minute phone call. Like it's just not part of, not part of what I want to be doing. Like I feel like those 10-minute conversations usually lead to a much bigger conversation that's important that we're having. And I don't want to deter people from picking up the phone and calling or sending an email and making sure that we got something scheduled. But the risk is basically like nothing, because we're just going to take a look at it, help see if we can help out. And I truly mean, like when we've worked with other firms, like I work with bigger firms, smaller firms, like sometimes we have our independence compromised because we're working so closely with businesses. So we have partnerships with other CPA firms too, where it's like, hey, we can't do this anymore. We're doing too much on this one side. So we're more than willing to work with other people and say, hey, we're going to do just this portion of it. We need you to do X, Y, and Z, and we'll do ABC, and make sure that we've got a delineation of who's in charge of what before we get going on those engagements. But yeah, definitely. I think there's almost no risk, and the reward can be, hey, maybe you're structured a little bit wrong, or you think there might be something that you're missing, and who knows? It's hard to put a dollar amount on it. Like this group, I can honestly say I think we've probably saved them $1 million, and we haven't even started estate planning, and they've got estate issues. So
That's fantastic. I think, and one thing I'm gonna just mention for the group as well is Fates, Bodily and Parker is their own firm. They're no part of GN or Resound. It's just like any of the other vendors that we work with or partners we work with in the marketplace. They're not sharing any information with us as well. So if that's a concern of anyone, that opening your books to them is going to come back to us, it absolutely will not. We stay completely independent from what they're working. We're just excited to be able to present to you all a great partner of ours, and that's Tom and his team. So we're glad to have you again, Tom. It looks like the questions have let me see. Oh, we already have another question. Great. Thank you, Melissa. Melissa is saying that we already offer profit sharing, a 401k, and participate in a cash balance plan to reduce taxes. Do you find other small businesses offering other anything else additional to reduce taxes outside of profit sharing 401k?
In terms of retirement planning, no, that's pretty much you're running all the things you need to be running. There's only so much, like the tax code limits, right? You can only put, I think, what's the number, 400,000 in, like between all those things together. So if you're doing all of that already, that's great. You're ahead of the game. And then do that until you get to the spot where you have max funded. That's fantastic. There's other, I mean, you should have like an HSA that you're offering. Like those are the nice, like that's the triple tax advantage, right? It's tax deferred when it goes in, it grows free, and then when you take it out for the right purposes, it's free. So like those very rare advantage. That's the only thing I think that has that. So if you can offer that for your employees, that's a nice little tax benefit too. And you could do matching as a company into the HSA plans to get to incentivize participation. Like we just put one in this year here for our employees. We finally got big enough to put like a real plan in place, and so we did that too.
Fantastic. All right. Well, it looks like we have another question. I think we can take probably time for 2 or 3 more. Yes. So for anyone who's looking to, the question is all about how can we meet? Can we do that? Brian did put that link in the chat if you would like to use that for. Actually, I think it doesn't say Brian, but it says ShapeConnect. Put that link in the chat. We will also be sending that link out afterwards, so feel free to do that. Tom, thanks for putting up your contact information up here as well. You can get that, and then of course, if you're lose all this information, you can always go to pro.resound.com and through our marketplace access more information about Fates, Bodily and Parker.
Yeah, thanks for having me. Have any questions, feel free. Anyone, that's my cell phone on there. Actually, feel free to shoot me a text. It's actually probably the best way to get a hold of me. Email sometimes becomes more like snail mail this time of year. Get a lot coming in, and it takes me a couple days to get through to it, but I'll do my best to make sure I get back to everybody that has questions.
Fantastic. Thanks again, Tom. Thanks for all of you for joining. We will be sending a follow-up for this, so please feel free to do that. I'll also include a survey in there. If you could take a quick survey just to let us know how this webinar went, what you'd like to see in the future, as we're looking to, of course, highlight more of our partners this year to make sure that you as our members are getting the best value for being a part of our program. And we're so excited to have you as an Accelerate member joining us today. Hope to see you again in the future. Thanks again, Tom. We're glad to have you.
Of course. Thanks, Josh.
All right, take care, everyone. Bye-bye.